Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. I'm making professional trading simple. And welcome to the Tuesday night daily video. This should be a quick one today. Not a lot to talk about. Apple crushed its earnings. It was way up overnight. I had mentioned that I thought, if it could get above the 192 mark, well, duh on my part, but I should have figured, most of the time when stocks report, if they report very well, they move on average of about, about 5% is a pretty typical move. 5, maybe 10% on a really good one, but 5% on Apple at 200 is what? Yeah, about $10. And I think that's about where it ended up for the day. Let's do a really quick check here before we get back to the markets themselves. But yeah, so about 5%. So I should have actually said that in my video yesterday. But it made total sense. As we get into the video, you'll see why. It's right back up to its upper resistance area, and this is typically what stocks do after a big reporting like this. Is they just kind of flutter sideways for a while, and that doesn't matter. It doesn't make a difference if they go up or down. Usually, you'll see this on a gap up, gap down. For that next day, they just kind of base sideways, trying to find their direction, people getting in, people getting out, making decisions as to what they want to do. So this is very common to see. You'll see this on most everything. I think RIM did the same thing after it reported. Yeah, see, it's still basing sideways. RIM isn't doing anything yet. What about Goog? 550. Yep, 550. There we go. A little bit up, a little bit of down. This is very, very common for these stocks to do that. So you might even see Apple do this for another few days, maybe even the rest of the week, before it really starts to make another larger move, whichever direction that's going to be. All right, so enough of the fun and games. Let's get back into the markets. Here's the Dow. This is where we finished up. Little trend line I drew in here. You can see where we broke this trend line, moved back up, retested it, came down, testing this trend line, moved back up, came down, broke it. Now we're retesting it from the lower side as well. And this is where we close the day. Very, very slow day on the markets. 50 points. Overall, maybe 51 points, about a 0.5% on the Dow. So we're going to continue to watch this particular trend line. This is the next one to break, and then below the 50 moving average on the 60-minute will be the next area to get underneath. Notice how it's really flirting with the 10,000 area. It's above it, it's below it, it's above it, it's below it. It's not really sure what it's going to do with it yet, but 10,000 really isn't acting as, isn't really acting one way or the other. It kind of dips below it as it wants to, and whether or not it'll hold, I really don't know. It sure isn't showing a lot of signs of life right now, and we'll get into here what we've been looking at. This is the same formation we see on all of the charts. SPX, Dow, NASDAQ, they all look about the same, and that's they're in this channel. Here the Dow is at the top of its channel, SPX, same thing, blah, blah, blah. But notice this. Notice how we ran up, put in a little high base, resolved down. Ran up, kind of a move to the upside, high base type of a formation, resolved to the downside. Move up, resolve to the downside. Move up, move sideways, down, move up, move sideways to up. Well, I'm going to say that my bias is now that we resolve to the downside. Maybe we get some sort of a blow-off top where it sneaks above it, grabs a bunch of bulls, and drags them back down. So I'm not saying, don't go long here. I'm not saying that. I'm not saying, definitely we're going to crash and burn and whatever else. I'm just telling you that previous has always shown us that we resolve to the downside when we move up a little bit to sideways on the markets. So I would definitely put my bias there, especially since we're at the top of this channel resistance. If we move up and above it and you want to get long, great, have at it. I don't have a problem with that, but I'm just going to tell you to manage it extremely carefully once you're in. Not saying don't go long, just saying manage it carefully once you're in because of this price action here. You can see we've had moves to the side with a pop up here and a move down. Here was a little move to the upside and a move down. Here was a big move to the upside and a move down. Here maybe we see the same thing. Maybe we see it move kind of up, pop to the upside, and then by the end of the day drag it back down. So if you decide to go long up and over these areas, fine, great. Not a bad move. it's still a bull run right here, so you're definitely warranted in going long, but manage it very carefully, as extended as we are. NDX on a 60-minute got above this support area, and it held today. A nice move up. I shouldn't say today, this was yesterday, but a nice move up. We had a gap up on the Apple earnings, and look what it did. Nada. It pulled right back down, right back into support. So the bull run, yes, still in effect, but this is certainly not the kind of action the bulls wanted to see after Apple reported all of its earnings. I also mentioned, too, that once now that Apple's done, maybe this is when we're going to see the bigger pullback. Intel's done, RIM's done, Goog's done, Apple's now done. What's left? I mean, what's really going to pop the markets at this point? I'm not really sure. So continue to watch this. Got to get up and over this 1770 area to really continue to put pressure on the bears on the NASDAQ side of things. NASDAQ on a daily, still below this dotted line. You can see we did gap up today, but remaining below this dotted line. It is going to take a lot of work on the bull's part to get up and over this particular line. It's just because it's at such a steep angle. But now that we've broke it, look how we keep retesting it and keep retesting it. Maybe we retest it some more. Who knows? We could retest this all the way up to 1900. I mean, who knows? Now we won't get to 1900, but I mean, we honestly this could follow it up for a while. So we're really looking for a break back down here below ultimately the 17. Man, I'd like to see it get below 1740, 1730, and then ultimately back below this 20-day moving average if you're bearish on the markets. On a weekly time frame, still Tuesday, but this is actually still a bullish looking candle. Won't know until the end of the week. SPX on a 60-minute. Notice how this trend line is holding very nicely. We are right up at the 20-period moving average. And we have not come back to retest the underside of this yet. We have now broken it, but we've not come back to retest it. So I have a perfect scenario. It's just my perfect scenario that I explained to my subscribers today about what I think might happen. We'll see if it unfolds. I'm really curious to see if we end up breaking this and coming back down here to get below the 50. And this particular trend line here would be very, very bearish. It'd be a good start to a pullback for the bears. But once again, we have this 1080 area, then 1075, and these are the two major areas we want to watch going forward if you're a bear. SPX on a daily, same thing. See this touch the top of the channel now. This one busted up and over, but ultimately the resolution of it was down. This thing here is popping, 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 but ultimately it's sideways to up a little bit, which tells me based on this action that it should eventually resolve itself to the downside. But it could follow it up for a while before it actually falls. But this is getting very, very close, I think, to a move to the downside. So the bears should be starting to kind of lick their chops at this point. SPX on a weekly, still a little bit early, but we are in this rising wedge as we've been watching for quite a while. VIX on a daily. Oh, wait a minute. Now the markets were down and the VIX is down. That's a divergence. That must mean something. Yeah, I talked about this yesterday. I'm not going to worry about it. Who cares about the divergences? The VIX is good to watch, though. I like, to see. Actually, it doesn't bother me at all that the VIX is falling while the market is quasi falling too. The VIX can get lower because that means options are cheaper, and I kind of like buying options. So I don't have any problem with this. But as of right now on the weekly, I really want to be watching the weekly because that's kind of the bigger scale overall. We have two closes below the 200-week moving average, and this is continuing to move down. If it moves down any further, it'll touch, obviously, this upper trend line, and then eventually this green support line back here at about the 18 mark. That should hold as support, and if you're an options buyer, this is a good time to start maybe collecting some for some January, December type put